Today, we're looking at the Market Pulse AI by Mr. Yuri. So Yuri is a fairly well-known developer. He's been in the marketplace for a fair amount of time, and he does appear to largely know what he's doing. So be curious to see how this particular bot works and what strategy it's actually trading. Off the bat, anytime you see these types of currency pairs, you can typically assume this is going to be more of a mean reversion, perhaps grid style system. Why is that? Because these are the classic mean reverting pairs. Like Euro CHF is a great example, as is the Aussie New Zealand dollar. And you can think about it logically, right? Like the European economy more broadly and the Swiss economy, which in Switzerland's in Europe, are obviously very closely interlinked. Therefore, the currencies, not always, but should generally move relatively close to each other due to that economic linkage. So if you have a massive deviation in the euro from the CHF, there's likely to be some sort of mean reversion between the two. Same thing with the, for instance, the Aussie dollar, New Zealand dollar, which is not here, but even like the odd CAD, New Zealand CAD, as they're both very much commodity currencies, there is certainly a link between the value of the currencies because of how much global trade flows are impacted by certain commodities. In the case of New Zealand and Canada, for instance, soft commodities are quite common, like agricultural commodities, and that's why you'll often see the currencies move reasonably close together, which in turn makes it optimal for mean reversion. So here the gentleman is saying that there's no crazy marketing stuff here. The actual strategy seems a little bit like he might be fluffing this up. So the EA's core is built on a multi-level price series decomposition using non-orthogonal wavelet basis, adaptive impulse filters based on Salas entropy. So like, yeah, all of this stuff can be used in quant finance, but usually you don't see it in retail stuff just because it's just rare. Like most people would use more like simple technical analysis to make entries. Trying to use hardcore quant finance concepts, it's tough to make it work in a retail context, and also it oftentimes is overkill too and not necessarily even effective in this situation. So I'm not so sure if this is more just something he's doing more out of marketing. I'd be a bit skeptical that it's actually being implemented, but apart from that, we can see that it is indeed a real bot. It looks to be grid-like, gauging by this equity curve in these shots here and just by the actual currencies it's running on, and so far people seem to be reasonably happy based on the reviews and the comments. I went over to the live signal here. We can see it's been running for around a month by now, actually a bit less than a month, and it is indeed a grid. We are seeing some positions closing at the same time. We're seeing some pretty aggressive lot scaling, like going from 0.9 lots to 0.27 lots within one trade. Like that's pretty hefty. At the same time here, like, yeah, we can see similar situations here. There is certainly some pretty aggressive lot scaling. Just one thing to be mindful of. So honestly, it looks like a pretty basic currency grid in my opinion. If we go look here at the actual equity curve and the actual chart, we can see that over the span of 1 year, it turned $10,000 into 13.24, so it's pretty conservative. We are seeing some pretty major detachments in the equity from the balance line here, so there are certainly some grids at play. The drawdown is super low, but that's balanced drawdown. If we go to the equity drawdown, it's at 9%. And one thing to note is that with any sort of grid system, if you just have one or two more losers in a series, you can go from 9% to 20% to 30% to 40% pretty quickly. So honestly, it looks like a pretty basic currency grid. If we go to the inputs tab here too, right now it's on low risk, but we can also make it high. For instance, there's a max equity stop loss drawdown, so also pretty reasonable. Now I'm just running it with high risk to see what happens. So yeah, honestly, like he's doing a lot of the best practices for running a grid. He has an equity stop loss in there. He's using the right currencies. It's really not rocket science. It's a basic grid entry. Let's maybe run ourselves a visual back test to see, just in case of like what actual entry he's using to decide to make trading decisions. I'm not seeing any oscillators, but most likely there's some sort of oscillator hard-coded. Yeah. I would venture that there's probably some hard-coded Bollinger Band or RSI or stochastic behind it. So guys, like it's a real system. Like this is a tried and tested grid strategy, trading the right pairs with an equity stop loss. If you like grids, if you like this style of system, it could be a good fit. just be very, very mindful to always use an equity stop loss. You don't want to plop this on a big account with zero risk control and hope for the best, because it could absolutely go boom. Another good thing is it's only running on one pair at a time, which makes a lot of sense for grids, because you reduce the risk that you're going to have a big series if you only run it, a big series of losers, if you only run it on one asset as opposed to 10, 20, 30 assets. And that's a big mistake that some folks do. But overall, looks solid, pretty straightforward currency grid system, nothing special, but it's pretty cheap, so you might very well get your return on it if you're planning to use it with a more meaningful account size, but always be mindful to use the equity stop loss. So guys, hope you enjoyed the review video, and I will see you in the next one.